Russian Junk Credit Rating by www.forexconspiracyreport.com. Standard & Poor's has reduced its credit worthiness rating for Russia to the junk level. The Wall Street Journal notes that the Russia rating slips to junk as Standard & Poor's moves Russia down to a BB plus level. Russia's fractured economy suffered another potential blow Monday after credit rating firm Standard & Poor's cut the country's credit rating to junk, sending it below investment grade for the first time in more than a decade. While the move had been largely anticipated by financial markets, the news, which came late in the Russia day, helped drive the battered ruble even lower. In cutting Russia's rating to BB+, S&P cited Russia's limited flexibility to use monetary policy to help spur growth. Russia has two huge problems. One is that the price of oil has fallen by half over the last 6 months. Because gas and oil are Russia's primary exports and sources of hard foreign currency, this is a real problem. The other is the sanctions imposed by the European Union and the USA in response to the annexation of Crimea and support of separatists in eastern Ukraine by the Russian government. These sanctions virtually eliminate the ability of Russia to borrow hard currencies. Ruble falls again. The Business Insider covers the same story and notes that as a result of the debt downgrade, the ruble is getting slammed again. Earlier in the day, the ruble closed at about 66.3, which was the biggest decline for the ruble in over 2 weeks. The currency's drop earlier Monday followed the escalation of violence in Ukraine over the weekend, when Russian-backed rebels launched an assault on the vital Ukrainian port city of Mariupol, killing 30 people and injuring 83. Following the attack, the European Union's foreign policy chief warned of a further grave deterioration in relations between Russia and the European Union. The Russian government under Mr. Putin has bitten off more than it can chew. To a degree, the tough guy approach that Putin has taken regarding Ukraine plays well with some folks in the hinterlands of Russia, but is starting to wear on those who had hoped for a better life and normal relations with the West. The continuing ability of Russia to pump oil and natural gas and ship it out of the country is the only thing keeping things from becoming worse. Anyone trading the ruble is simply placing bets on how fast it will fall and how far. The Russian junk credit rating is simply one of the symptoms of a deeper lying ailment. How much pain can the Russians endure? Russians are unfortunately familiar with hard times. Poverty was rampant under the Tsars and the police state of Stalin, and the rest of the communists was hated but endured. The country has 30 million casualties in the Second World War, and when the Soviet Empire fell apart, there was hope for a better life. Some of that has come to pass, but now Putin is leading his people back to the days of enduring hardship so that a willful leader can have his way. CBC News reflects on the economic pain in Russia. They provide an example of how monthly mortgage costs have suddenly doubled to $2,100 US a month, more than the entire monthly salary of most Russians. In 2008, one woman signed a mortgage on a $90,000 apartment. Even with her accounting job, the banks wouldn't give her a traditional mortgage, but offered one in US dollars instead. She took it. Hundreds of thousands of Russians did the same thing. With a stable ruble and predictable payments, mortgages tied to the US dollar seemed fine. Until this winter, when the Russian ruble fell off a cliff, losing nearly 50% of its value against the US dollar. The point is that the woman who earns her paycheck in rubles needs to pay twice as much as before for her mortgage, and it is getting worse. The Russian junk credit rating will only hurt more, and the pain of the Russian people will only get worse. For more insights and useful information about trading foreign currencies, visit www.forexconspiracyreport.com.